Well, hello and welcome to this Room to Grow podcast brought to you by QX Global. My name is Philip Hillman, and today I'm with David Tymms. We are both consultants to QX Global Group. We thought today we would want to discuss with you a recent report that was brought out by QX Global with JLL, which was entitled Where Next for Student Housing? And David was involved as one of the contributors to this report. So, David, what was this report trying to address?
I think the last academic year, let me rephrase that. The academic year beginning September 24 saw a lot of changes really, and a lot of headwinds. Many of which were reported widely in mainstream UK press. So it seemed apposite to look at what was really going on. And I'm talking here about things like the impact of the visa changes in terms of dependence of international students, the ongoing issue of student housing viability, increasing construction costs, increasing regulatory burden, and what was happening more generally, and why the pipeline indeed was appearing to tail off. So it seemed like there was a sort of a confluence of different things happening, and it was a timely moment really to take stock of what was going on in the sector.
Okay. So let's perhaps start by looking at international students. What trends were you seeing in international students, and what are the implications of that?
Sure. I mean, one of the big issues for the sector, the HE sector, and by extension, the PBSA sector, has been the big drop in international student numbers coming through. And I don't think this will be news to any of our listeners. And I was really looking at the data actually preparatory to this podcast, and the figures have improved slightly, but not significantly. Overall, if you take the Home Office data, which is really the best source of data rather than looking at UCAS and HESA, HESA's very lagged, UCAS is just undergraduates. But if you look at the Home Office sponsored study visa data, that's down. That was at the time we wrote the report, that was down about 17%. I think it's leveled out at about 14%, but that's big numbers in terms of the number of international students coming to the UK. And that's been for a variety of reasons, really. I mean, we've seen a massive currency crisis in Nigeria. The Naira has gone from 500 to a pound for years and years to in excess of 2,000. It's dropping back and it's slightly better now, but that's been hugely deleterious in terms of the number of Nigerian students coming to the UK. We've seen China leveling off. India was down. That's probably to do with the changes to the visa status that I mentioned earlier on. So there's been a number of headwinds, I think, that have really driven lower international student participation in UK HE.
But I suppose that is in the context of a very dramatic increase in full-time international student numbers that we've seen. I think the report mentioned an increase of 81% in international student numbers full-time since 2014-15. So there are still a lot of international students there, aren't there?
Yes, you're right to call out the positives, Philip, and I probably should have started with that rather than talking about the negatives. I mean, if you look at the long-term trend with international students over the last 10 years, as you say, it's gone up 88%. That's a staggering number of additional students coming to study in the UK. And bearing in mind, that's also come at a time when we've gone through Brexit, which has seen EU student numbers coming to the UK decimated, down 22% overall. So if you take those out of the figures, you're looking at something like 121% increase in non-EU international students coming to the UK. So I think the fall off that we've seen in the 24-25 academic year has to really be seen in the context of overall stupendous growth in recent years.
One of the things that has been mentioned at a number of recent conferences has been the changing nature of the economic spending power, potentially, of these international students, and a suggestion that maybe we're moving from the days when the international students were always outbidding the UK students for the best rooms. And indeed, if you looked at the best rooms in many schemes in London and of the main university cities, you'd tend to find very few domestic students in the best rooms. If they were even, domestic students were quite often dominating the HMO market and not quite so numerous in the purpose-built sector. What are we seeing in terms of the changing demographic or the economic spending power of students, and why is that?
Sure. I mean, I think, yeah, of course, you'll have seen this in your years as chairman of alternatives at JLL. You'll have seen a lot of that coming through in the sort of 10 years up to around about the time that you left. I mean, I think one of the problems with this space is actually the data for HMO occupancy is very hard to come by, good data. So PBSA sector has got, and HE itself has got very, very good data and stuff that we can really pore over. But what the PBSA data is showing us is that, or the university data is showing us, is that the number of students from middle income, emerging middle class economies outside the core of China and some of these other places that have been the sort of driver of international growth in the UK. That top level is starting to tail off, and those middle income countries are coming to the fore, and that obviously has implications for the universities themselves, and it has implications for the PBSA sector. With the domestic students, what we're seeing is, and this was the thing that I enjoyed most actually about the report, and I should shout out to the JLL research team who did some fantastic work here, Marcus Dixon and Carl Thomas. Thanks, guys. It was a great piece of work. But what the HESA data, time lag though it is, has really shown us is that the lowest quintile of students, the bottom 20% in terms of household income, has really driven growth in the UK in terms of participation in the last 5 years, up 29%. Really, really good story in terms of widening participation, and quite possibly related to the fact that the tuition fees themselves, in real terms, have fallen dramatically in the last 5 to 10 years as each successive government has declined to sort of put them up markedly since 2012 when they came in. So you're seeing two things, I think, Philip. You're seeing the UK domestic student body that's from the lower income backgrounds really, really coming up, and internationally you're seeing the middle income countries coming to the fore. And I think that has an implication for the student housing that's provided in the UK.
I think it must do, mustn't it? Because we have, as a sector, from the perspective of an operator or developer, very much relied on the international students to fill the beds of premium schemes. And I suppose in this post-COVID world now, perhaps there's going to be a much greater focus on a more diverse mix of students, probably a greater focus on the UK student market. And that's going to have implications on how people should be designing their student accommodation going forward.
I think so. And we're probably going to touch on viability later on this podcast, and I'll probably bounce some of that back to you. But I think, self-evidently, if you've got students from a lower wealth background, then clearly the product set is going to be different, because it's going to be more price sensitive. And I think that is happening. I mean, one of the things that we are aware of in HE more widely and within PBSA is we know about commuter students and the lowest quintile I talked about earlier on. A lot of those students will be studying at their local universities and living with mum and dad or guardians or whatever. There's already a big cohort of those commuter students. But what we are seeing the emergence of is your part-time commuter student. So we all know that contact hours in universities are an issue or perceived issue. If you're doing an arts, social science, humanities degree, you might be looking at 6-8 hour contact hours a week. And so many students are making the decision, well, do I actually, even though I want to study at University X, it's 100 miles from where I live, do I actually need to live there? So you're seeing the rise of the part-time commuter student, and I think it would be fascinating to see some research on that. The data, I think, is very hard to get hold of. But these students are there, and they're sofa surfing when they get up to town. Some universities, like the University of Sheffield, are building student hotels where you can book in for a night or two a week, go to your lectures, and go back to your mum and dad. So, excuse me. So I think we are going to see some different trends in terms of housing requirements emerging.
So we've already flagged up two key changes in terms of the nature of the demand changing. Firstly, the international students are not necessarily going to have the spending power that we've been used to. Secondly, we're saying that the proportion of students from lower wealth households is increasing and has increased quite significantly. I think you said 29%. So this then very much puts the pressure on the viability and affordability factors. The affordability, what can a student actually afford to pay, given there is a cost of living crisis still ongoing? And secondly, viability in terms of what can a developer afford to build if they can afford at all. And your report mentions a figure of rents up to or in excess of £200 per week to make a scheme viable. And you'll get a different figure depending on who you talk to. But talking to some of my old colleagues at JLL, they were talking a figure of significantly in excess of £200 per week being the threshold in the majority of locations now, possibly £220, possibly £240 a week to build the sort of typical cluster flat type accommodation that dominates the market. What do you think the implications are going to be if we don't see any significant change in these factors dominating the decision-making process at the moment? What's it going to do for students, and what's it going to do for developers?
Well, that's a tough question. When I might actually bounce back to you. I mean, I think we're seeing obviously, a tightening supply pipeline coming through, which I think is reflecting, all of these things. We used the term in the report, perfect storm, which was, not words that we use lightly, but if you think of that viability point, I mean, you should probably expand upon that in a second, but if you think of that viability point, whether it's 200, 225, 240, almost the number doesn't matter. There are only half a dozen, cities that can support that. So I think this is a serious issue for PBSA developers and designers, and what and operators. And we go on to discuss in the report is some potential solutions to that, which we should come on to in terms of how you increase that density and therefore increase viability. But of course, that takes a brave organisation, particularly in the direct let side, to break out of the tried and tested norms. But Philip, I mean, you were close to this back in the day, and I know you still work with the Bodus and some others. I mean, what are you seeing in terms of viability? What's your take on what's going on?
I think the dilemma that many developers are facing at the moment, and that is frankly leading them to slightly sit on their hands as regards starting new projects at the moment, is that there are only so many levers you can pull to address this viability issue. Yes, you can change the room configuration, so you can perhaps go less for fewer studios, which I think the consensus is that there's enough studios out there in most markets, and perhaps they were more suitable for the days when you had wealthier purchasers of rooms around. So you can go for more cluster flats. You could increase the size of cluster flats in the sense of more cluster flats more cluster bedrooms per flat. But then that does have a downside in that most students, have expressed demand being most strongly for 5, 6 or so rooms in a cluster flat. Once you get bigger than 5 or 6, most operators, certainly Bodus, have said to me, it gets quite challenging to be able to fill that flat. So there's only so much you can do with that. The universities have quite often said, why don't we have 8, 9, 10 bedrooms? Sure. And they've said that to developers, but again, I think they're not taking the risk normally of occupancy. That's sitting on the developer operator. So there's not so much we can try there. You could change the overall type of accommodation from perhaps the cluster flat to sort of the townhouse type model, which has been tried. Certainly UPP in the past have developed those. I'm not sure that leads necessarily to any significant savings. I think that was more to do with the almost ambience and communal feel of the accommodation.
Yeah, I think so.
Yeah. And then you can also perhaps look at, major construction changes. So we've seen, that modular systems have been quite extensively used in the UK. I don't really feel that's a cost lever. That's more about timing in most cases, unless someone can come up with perhaps a modular solution which is significantly cheaper, but which also is seen as sustainable and acceptable. Then I think you really come back to the issue of location. I mean, that's probably the biggest lever you've got to play with. And I was interested to see in the report a mention of a University of Bath study that listed various things that students, where students' preferences were for various factors, which I'll ask you to comment on in a second. But the one thing that wasn't covered in that was location. And we have seen developers using location as a way of dealing with pricing. So I can remember when the likes of Unite first went out to Wembley or to Stratford or wherever, rather than being in zone 1, 2, or 3. And that was seen as a way of addressing that, because actually they were, both locations are on relatively good tube lines. You can get into central London quickly. But I'm still thinking, in many cities, you don't have too many options about where you can go. Land prices remain stubbornly high, despite the challenges that the sector faces, because actually residential is still very much in demand. So perhaps you could talk about some of the issues that the students identified in that University of Bath studies, to what they were looking for and how that affects what developers should be putting up.
Yeah, sure. I think location probably was an omission from the survey, and it is absolutely critical. I always remember Bob Crompton, when he was running a student housing company, saying he would go to a city and just build. He would work out where Unite were, and then build within a quarter of a mile closer to the campus of them, and charge £2 a week less in rent, and that was his.
It was that simple.
But if only it was that simple. But maybe it was back in the day. But yeah, I mean, location is key, and I think when I was at the LSE, where I was director of residential services for 8 years, we surveyed the students from time to time about where they would live. This is going back a good few years, but I think the maxim remains. And it was very hard to sort of sell the idea of living more than half an hour, door to door from campus. Now, with Wembley that you've mentioned, with the Elizabeth line opening, it does open out the possibility of going more widely. But yeah, location is key. But I think that location play really only applies in one or two of the very, the most expensive cities: Edinburgh, Bath, London, Bristol. In other locations, even where rents are relatively high, like Manchester, it's not such a factor in my view. I mean, it was interesting that, you mentioned the Bath research. It did throw out some of the ideas that the paper explored more broadly, in terms of how you get more beds on a parcel of land. Is it catered? Is it going larger cluster flats, which you mentioned? Is it going twins? God forbid. All of these ideas, but they don't receive favour from students. But I think, in a way, that the survey perhaps framed the questions wrongly. Rather than saying, what do you and don't you like, it should have said, for a price, what would you like and what would you forego? That would be a better way, a better approach to take, I believe. And I think, looking at London, which is obviously the most challenging market in terms of pricing. If you look at what Urban Est have done very successfully, albeit with partners, they've done non-en-suites, they've done twins, and their occupancy, and as far as one can tell, I mean, they're a private company, so the data is not as fully available as somebody like Unite, for example. But as far as one can tell, their occupancy is very good. It's a very successful business.
So, thinking again of what levers that can be pulled, another one is, perhaps the issue of how the scheme is operated, because we've seen since you and I first got involved in this sector, when it was hardly a sector at all, we've seen a much dramatic increase in the hospitality package that's effectively offered to students. In fact, the word hospitality wasn't used in the early days. You just managed a block. And now it's all about hospitality sector skill sets being brought in, staff who've been fully trained in hospitality or come in from the hospitality sector. And there's been a big move towards 24/7 presence in buildings, and much more intensive staffing, focusing particularly also on student welfare, of course, which is, we all know, is an increasingly important factor, and which I think is a main concern for parents, certainly when they're sending their children to university. So are the savings, and you're on the operational side, when you're with the universities in the past, do you think that we ought to be seriously looking at cutting back this hospitality package to make it more affordable? And after all, isn't that what's happening when students are going to an HMO?
Yeah, I mean, listen, I think it's, in terms of challenging viability and affordability, I think it's a package of things. So, what the Bath research showed was, games rooms, it didn't talk about bowling alleys and cinema rooms, but some of these more esoteric sort of additional facilities are probably not really moving the dial for most students, and they could, in my view, in most cases, those could be swept away and additional beds could be put in there. It's interesting you mentioned on-site security, because actually that's scored very highly and is seen as a sort of almost, along with location and sort of broadband, is almost one of the kind of must-haves. But to your general question, I think, perhaps a less involved, operational model offers some of the savings that might be made. I think if you're an operator, you've got to look at this holistically, and where can you trim your cloth to get these numbers down? It's extremely difficult. If you think about the OpEx of most organizations, so much of it is essentially fixed costs. It's in your energy, it's in your staffing, it's in things like your insurance, your PPM. There are areas where you can run more efficiently and more effectively, but and QX actually, a little plug, provide part of that agenda. But it's extremely difficult to affect change. But I think Res Life. I mean, I remember when we were in the early days of Res Life, you were looking at £6 to £10 per student per annum. It doesn't really move the needle now. Maybe models now have become more fulsome and cost more, but I don't think necessarily there are big gains in that environment. If you're offering a 24/7 staffing model, which often is required for fire safety, by the way, then it is what it is.
It will be interesting to see whether operators, many of whom have got a mix of cost points, whether that's type of room or indeed the level of service. Although I think the level of service, we don't see quite as much variation in how operators divide their cost range. It'll be interesting to see whether perhaps there is an increasing focus on a slightly more frugal hospitality package, whether people think that would be a negative move for the sector, or whether it's just inevitable and what's needed to respond to the cost pressures. Another lever you can pull is university partnerships. In fact, this was, I think, perhaps seen as the great hope going forwards, both by the planners of the city authorities, but also to some extent by many developers and investors. It was felt that if universities partnered properly with the private sector, then you could spread some risks between the two parties, and you could make sure that there is a really sort of joint objective as to how the accommodation should be designed, built, and serviced. Sort of best of both worlds solution. Any thoughts on that? Has that
sure? I mean, I think that is obviously one way to unlock affordability, even in the absence of an affordable policy such as we've got in London. I mean, evidently, if you're doing a long dated DBFO, design, build, finance, operate model, such as Unite are in the process of agreeing with the University of Newcastle, then you can really drive rental tone, because those agreements are long dated, and that income is underwritten. I think the challenge with university partnerships is they come in all shapes and sizes, and most universities, and I do mean most, just simply don't have the strength of balance sheet to underwrite deals of the Newcastle nature. You're talking about a very narrow band of Russell Group institutions that really can make that commitment. Bear in mind, these deals are often on balance sheet. Even if they're off balance sheet, it's a contingent liability on your balance sheet, and with volatile student numbers. By the way, the UCAS data, what they call provider data, will be out next month in February. Will indicate who the winners and losers were in terms of undergraduates for the 24 intake. So just last September. So we'll see who really got whacked actually in terms of that fall off. So I think university partnerships are, they do offer a solution. And then, to mention Urban Nest again, doing great things with LSE, with UCL, with King's, etc. But they're not for most institutions. Most of the post 92s, they have to be much more fleet of foot. They might do a referral agreement for a year or two, but they're not really in the business of underwriting accommodation, which doesn't get you out of this loop of how you make the beds more affordable. Sorry, I should just add, Philip, that actually the OFS, who were the regulator, I think when we wrote the report, something like 40% of universities were running at a deficit. I think that number's now been updated, and it's in excess of 70%. We've got the universities are facing real financial crisis here, and underwriting, PLCs and large private equity owned student housing businesses is not at the top for the list of priorities right now.
I'm certainly, from my perspective, not expecting to see an increasing number of universities prepared to underwrite rental demand. I think there are some special occasions where you might get that, but that's certainly not going to be the norm going forwards.
I agree. Yeah, absolutely.
Martin Blakey on his HEPI blog, I think, was quoted in your report as saying the growth in student numbers no longer necessarily equates to a need for additional PBSA beds. So that sounds sort of pretty negative in terms of the outlook for the sector going forwards. And yet, everything I hear from investors is that they want to get more into the living sectors and student housing in particular. So how concerned should the sector be? Are we being very negative on this podcast, or is actually the outlook, do you think, more encouraging?
I mean, I think fundamentally, I do agree with Martin. I mean, growth in students does not necessarily equal the need for more beds. I mean, there's a lot of talk in the sector about core demand, but actually the more savvy, which core demand, by the way, traditionally has been defined as all international undergraduates, all UK first-year undergraduates, and all postgraduates. But actually, if you really drill into what core demand is in any given location, it's way more subtle than that. Of course, it is. You've got commuter students that we've talked about. You've got all sorts of other factors that come into play. And I think Martin's central point is that if you've got a growth in students, there may be all sorts of reasons why they don't require student housing. We've already talked on this podcast about part-time commuters who are sofa surfing, for example. Where do they sit in the figures? You can't just look at a HESA return and say, okay, the University of Wolverhampton has recruited all these students from Greater London, probably a bad example. Ergo, they're going to need beds. They won't necessarily need beds. They might be getting on a train to Wolverhampton once a week. So I think that is a headwind and a factor that you have to take into account. But in terms of your wider question, sorry, go on.
I was just going to say, sorry to interrupt, but I don't think that anybody should be relying on a growth in student numbers full stop. You should be looking at what is currently here and then deciding, is that level of demand sustainable? If you are relying on a further up participation levels, I think we're at peak participation now, personally. And then if you're relying on more international students, well, I think we've just said that even if there are more international students, they might want cheaper accommodation. So I think some of the underlying assumptions which have driven the growth of the sector are perhaps no longer there. Added to the fact that in terms of numbers of 18-year-olds, we were talking about that little demographic bulge from 2020 to 2030.
Sure.
So we're getting closer to the point where
we're getting closer. I'm not sure I agree with you, by the way, about participation. It'll be interesting to see. I mean, in South Korea, I think something like 80% of 18 to 30-year-olds have got a degree or are studying at a tertiary level. So I think there is
participation that requires accommodation. Shall I qualify?
Well, that's the point. You're right. I mean, the 18-year-old bump is coming to an end in 2030. China numbers in terms of families, children per household is leveling off and falling. So you can't rely on that growth going forward. And Martin's core point about the different types of students rather than the same type of students is absolutely right. The point I was going to make, of course, is it just depends on markets. Some locations, particularly where local authorities have been, quite anti student housing for a number of years, have really suffered as a result. And actually, investment returns in those locations are very good. Bristol is the obvious example. Manchester had a moratorium on new student housing for years. It's now off. I'm speaking to you from Brighton, where we had the same for many, many years. They finally took their foot off the brake 5 years ago, and perhaps too much accommodation is coming here. So I think there are still, if you're looking to invest in this space, it's not about looking at the UK as a market. It's about looking at individual cities and then to your point, Philip, it's about looking at locations within those markets.
So really, just to sort of conclude, and there were some conclusions in the report, developers, I think we all know, are struggling to develop due to viability. I don't think that's going to change very dramatically until I think probably the one other lever we haven't talked about, but it isn't a lever that the developer can pull. It's the planning situation and the whole planning regime. And that's affecting not just student housing, but that's affecting many areas of real estate. Clearly, the Labour government wants to see development happen soon as a way of getting economic growth. But the reality is that I don't see the things happening that will enable that anytime soon. Then I think the other area was the fact that some existing assets in some locations might potentially become overpriced because the wealth of the bulk of the demand is perhaps not what it was. We're seeing changes in the type of students coming. So that really means that operators are going to have to reflect very carefully, aren't they, on who their target markets are, both for new schemes where they are able to develop, but even for their existing schemes when it comes to doing a refurbishment, or even when it comes to just how to market it for this next year. They are going to have to really reflect on what the sort of wealth pattern will be of those students.
Yeah, I think that's right. I think we saw some heavy discounting towards the end of the last academic intake in July, August, September, as some operators, struggled to fill schemes in markets that we know are challenging. We don't need to reel off the cities. So I think that is a challenge. The other thing we haven't talked about, Philip, on this podcast, of course, is the renters' rights bill, or renters' reform as it was under the Tories. We've actually got cross-party agreement that security of tenure is too heavily weighted towards the landlord in the UK currently, Section 21, no fault eviction. And the way things are going at the moment, PBSA is going to be carved out, but HMOs won't. So if we want to try and finish on a positive note, what I think we will see, and there's evidence of this already, is HMO landlords leaving the market. So in some locations, lower cost locations, as well as higher cost locations, your sort of northern cities, your Huddersfields of this world, you may find the HMO market tightening, which is obviously a good thing for PBSA.
It is. I agree. It is being tightened, and I think it has been tightened for some years as there's been increasing licensing and regulation. But we are also at the same time seeing a greater institutionalization, or greater institutional involvement, I should say, in the HMO market. So right. It used to be lots of amateur landlords, some with pretty poor reputations, and treating students really badly. But actually, now there's quite a choice of really good quality HMO in some cities, but some cities have barely got any spare HMO accommodation. And increasingly students have been looking at not just the question of an HMO or purpose-built student accommodation, they've been looking at HMO or purpose-built student accommodation or a new built flat and renting an apartment. But
yes, exactly. BTR is eating some of these landlords' lunch as well, isn't it?
Yeah.
I mean,
in fact, we increasingly hear that a lot of the BTR rented property is let to students. So there's some serious challenges there. I personally still feel really upbeat about the sector. Why? Because although these are issues which are going to cause fluctuations in demand to some extent, these are at the margins. And fundamentally, demand is driven by the fact that people still have that point in life where they are going to go to university or they're not. And the majority are still prioritizing. The majority who are thinking of going to university are still going to university. And there's only one point in life where the majority of them are going to go. And that's what, in that sort of 18-year-old onwards.
Yeah, I think that's fair. It's that, you talk to Nick Hillman at HEPI, he will always say that higher education is a sort of a defensive play. So actually, in times of economic instability and recession, actually, people will opt to go into higher education. So it's a draw in that sense. And from an investor perspective, it is definitely a defensive asset class. The caveat I would give is yields will always be what they are, but I don't think necessarily we're going to see inflation plus rental growth in the short, medium term, is a personal view.
Well, I rather hope we don't, to be quite honest. I think it needs to be sustainable at affordable levels. And the levels that we've seen of, 8, 9, 10% plus in some situations isn't sustainable for the students. And if the developers are relying on that, well, they would have been in big trouble. But it's still a positive outlook. And I think on that positive note, it's probably time to wrap up. Thank you very much for watching. We will put a link to the paper at the end of this podcast. But on behalf of myself and David, thank you very much. Goodbye.
Thank you. Bye.